Good afternoon, or good morning still. Apologize there. At 11:30 here in Pittsburgh. This is Chris Cannon with Retire Right Financial Planning, as well as Keith Traficant. We have a special guest speaker here today, Ravi Koka from StockSnips. I appreciate you all for spending some time here. We will be recording this and posting it on our YouTube channel, so if you can't make it, there will be a live replay available. We got today the idea for today primarily from the fact that you can't turn on the television and not hear about artificial intelligence or AI. I probably get a call every other day asking, how can I participate? How are we utilizing this? Will this change what we're doing from a financial planning and investment standpoint? We're very blessed to have a AI expert, Ravi, here locally in Pittsburgh from Mount Lebanon. So I asked him, and we've had some conversations over the years on utilizing artificial intelligence, given his background, on what we can do to incorporate it into our practice to ensure we're getting the best outcomes and the best solutions for our clients. And Ravi's been an excellent asset to our firm and a very dear friend. So I asked him to join us today to kind of talk about it. So this is going to be a very open-ended conversation. Please feel free to interject with any questions you may have. But the title of our webinar today is going to be AI Investing Unveiled, Separating Hype from Opportunity in the Future of Wealth Management. So without further ado, Ravi, I really appreciate you taking the time to join us today. If you don't mind just giving everyone a little background on yourself, and we can kind of get started here in a kind of relaxed format.
Thank you, Chris. Excited to be on this program. My background is over 3 decades in computer science and more specifically AI. I had the good fortune of working with one of the leading lights in AI at Carnegie Mellon University. He was the inventor of speech recognition, which, as you know, very heavily uses natural language processing. So I've been around for a while. However, AI kind of didn't really take off in the 80s and the 90s, and not until mid-20s is when AI started to come to the fore, partly because of the growth of computing power.
Mm-hmm.
I'm also an entrepreneur, so I look at opportunities. My previous venture was in enterprise software, and I was able to start a company, grow it, and take it all the way to NASDAQ as a public company. That was in the application modernization space. So most of the Fortune 500 companies were customers of mine. I started StockSnips in 2016, 2017, when I saw the intersection of AI and asset management, wealth management. That's the opportunity that I decided to seize, and that's where we are today.
So you were AI before AI was cool.
That is correct.
Right.
AI has been around since 1956. So
Okay.
there,
Well,
there, there you go.
yeah, that's a really good segue. So let's talk about like what is AI? Like let's kind of lay a little groundwork. From the expert ears to our expert's mouth to our client's ears. In your words, what is AI? Right?
The very, very broad definition of AI, any human task that a machine can do is AI. If a machine can pick a tomato, that's AI. If a machine can open a door, or a robot in a assembly plant, which is, fixing some screws in a car, all of those are all normally, routine, mundane tasks that are done by humans. And now you have AI trained to do those specific tasks. Order fulfillment in an Amazon warehouse or in a pharmacy. And this is not new. This has been going on for the last 20 years.
Okay.
So that's why if you look at so that's a broad definition. Obviously, AI has evolved.
Yeah.
In the 50 through 1980, AI was considered to be more handcrafted knowledge. That means given a particular domain, you would
Mm-hmm.
have to create a lot of specific knowledge and business rules and rules and inference So it was a
Okay.
lot of handcrafted rules and the what is called expert systems, and they obviously required a lot of uh, processing power, computing power, and that's the reason why, in spite of some great work done by, the names that you see there, McCarthy, Simon, Noel, Raj Reddy, these are people, pioneers who, vision, image recognition, speech recognition, reasoning systems, expert systems.
Okay.
However, what happened I would say, after 1980, there was a new type of AI, which is called machine learning or statistical learning, which came up with this concept that you don't need all of the knowledge. Instead, if you give it a lot of data, the machine can, learn on its own.
Hmm.
That is really the second wave of AI. So, for example, you want to train AI to, you know, um, pilot an aircraft, right? If you give it thousands or millions of hours of data on, actions that a pilot takes, then it can go through that data and learn how to do that. So that's called machine learning. It's a little more of a brute force. Phase
Okay.
phase one, you needed all that knowledge, and that was very painful, right? But much more
Yeah.
difficult. Here, excuse me. In machine learning, again, you need a lot of data. AI cannot function without a lot of data. So, for example, image recognition, which is now 99.9% accurate, if you feed AI with, let's say, a few thousand images of dogs and cats, and then you label what is a cat and what is a dog, that's called labeled data, then it'll learn the patterns and come to a level of accuracy where when you provide it a new image, it's able to accurately say this is a dog, this is a cat. It can make a mistake because both have four legs and both have two eyes. So,
Okay.
how does it differentiate, right? So it's pattern recognition. So think of it
Okay.
as that's phase two, and then the last phase, which is what has happened more recently, is the growth of language understanding, language models, and popularized by ChatGPT in the last 2 years, where suddenly now you have you have machines that have been trained on all of the available knowledge out there on websites and blogs and so on, and so it's able to understand language and be able to generate new content, what's called generative AI, whether it's images or text. So, and this slide is just showing you the different types of AI, the natural language processing, that is machine able to read language and understand language. Machine learning, which I just explained, given a lot of data, it can learn patterns out of the data that you've given. And lastly, deep learning, which is the kind of really it's part of machine learning, but more advanced. Think of them as more advanced models that can better recognize patterns.
Okay. Yeah. So the example you gave of the images, I mean, I think of a lot of current examples I see today, utilizing from the self-driving Teslas. We have a lot of clients that have self-driving Teslas, right? That's that, I think they call it FUD technology, right? And then I was out in Arizona a few months ago, and they've got a ton of those, I think it's Waymo cars. It was wild. There are driverless vehicles that are taxis picking people up. I did not use one, but nonetheless, they were out there in full force, grabbing pedestrians and taking them wherever they want to go. So it was wild to see, all that data that's been curtailed. And again, you see on the news that Tesla now has a billion miles, of data in their systems, right? So we're seeing full blown levels of adaptation in our everyday society right in front of us. Maybe not so much in Pittsburgh, but it's coming to some degree. So I appreciate the kind of background knowledge on what is AI and how it's coming to the forefront and the types of AI between artificial intelligence and natural language processing, machine learning, and deep learning. And all very curious. So if we take all of this and look at what's happened recently, I think this next slide is a really nice segue into why we're seeing so much of this on the news and why we're getting so many questions on it, aside from ChatGPT, which is fun and useful. But it feels like everything's exploding and quickly, like going just faster and faster and faster. So if you don't mind speaking on that, and at what point does this continue on this pace? Where's the adaptation? And then we can kind of segment into a little bit more of our industry and what we're utilizing the artificial intelligence for and how that can help us.
Yeah, great segue into AI and how it can help digest all of this, growth and information, right? And we've seen this over the last 2 or 3 decades. Really, the onset of the internet, the explosion of, online information. Obviously, there's social media. We've seen the growth of that. Now, all of these have a great influence on various industries, including the stock market and the asset management and wealth management, right? So the one of the things that AI is good at is when you have this large volume of data, I think it's able to better recognize patterns than a human being can. First of all, human beings are limited in terms of the total of information that they can store in their brain. It's about 70,000 concepts, is what is supposedly possible for a human, which is why we specialize. You can't a wealth manager can be a doctor can be an engineer. You have to do many years of training in a particular domain and learn
Yeah,
all of the ins and outs. So this is
sure.
where AI comes in. If you look at the most advanced large language model, OpenAI or Google have put out, it is trained on 1 trillion words or tokens. That means, across philosophy, medicine, mathematics, it doesn't matter what the subject is. Everything has been fed in, and it is able to digest all of that information and recognize the relationships contextually, and that's the power. That's the power of AI in terms of being able to digest a large amount of rapidly changing information. And so it's another. Think of it as an extension of the mind or cognitive ability, just as the aeroplanes and the submarines were extensions of your motoring capability. You were able to explore the skies and the oceans. Now with AI, it's a different world. Now it's the kind of thing, knowledge tasks that you can do is going to evolve very rapidly in the next few years.
Yeah, and I think this statistic right here, and this is several years old, like 90% of the world's data is created in the last 2 years.
Uh,
I tell a lot of our clients, having done this for 20 years, 20 years ago, there wasn't a lot of information out there on stuff that we do. Now there's too much information out there. It's paralysis by analysis, and anyone with a computer can put an opinion out there. So it's kind of sorting through that and seeing what application is appropriate for you in your particular situation, and then, and going through that. So
The important thing here, Chris, is that
yeah,
this is both structured and unstructured information.
yeah,
So
yeah,
earlier computers were good at, numbers and structured information. Excuse me. AI is able to do that with unstructured. That means images, text, audio. It can take in any of that. That's a huge leap, right? Because
yeah.
if you look at them, more and more information is coming out in the form of online videos, audios, podcasts, etc. So it's able to digest all of that.
Wow, that's exciting. So let's talk briefly before we kind of get into AI investing. Let's talk about, I always get the question, what do you think about AI? And I go, well, depends on what we're talking about here because there's AI companies. So, question I have to you is, many investors are familiar with AI stocks like Nvidia and Microsoft, but what's the kind of the difference between investing in AI companies versus AI driven strategies, right? So there's components, there's companies, and then there's the actual strategies, which is kind of what we're utilizing, and we'll get into that here very shortly. Do you have any, how would you segment the categories of AI investing?
Yeah, the investing in stocks that are going to benefit from AI, that's the thematic. That's a thematic, right? Just like energy or, some other thematic ETF that's out there, innovation and so on. In the
Mhm.
case of AI, what that means is, an asset management firm, making a list of companies they think, because there's a whole supply chain, right? It's not just the Microsoft and NVIDIA. There's a lot of suppliers who supply the parts, right? So the components of
Mhm.
AI, including the infrastructure needed to support AI, right? That's huge. The data centers, the energy required.
Mhm.
So all of that. So that's the AI thematic. That is picking stocks that are going to benefit from AI. That's just, that's what AI thematic is. Now,
Yep.
AI powered investing is different. Now you're saying, can AI help me with my investment decisions?
Sure.
Can AI digest all this structured and unstructured information and provide me with better patterns and recognition signals that in picking stocks in a portfolio, right? That's the
Yeah.
a different application of AI. That is what we call AI powered investing. It does require, as I said before, AI cannot work without data. So these in AI powered investing, you need large amounts of data, and obviously price and fundamentals data is available. There's lots of data available on all of the 5,000 or more US equities, but there are also other types of data. For example, financial, textual, media, news data from which you can derive things like sentiment and so on, which become other types of data that could be useful in predicting stock price movements.
Yeah. So how did you, you're a brilliant individual, how did you come up with this idea, right? Like for me, I've used what we call a quantitative model and data to help take out personal emotion, personal thoughts, and it's hard not to have that even personally. Having done this for a very long time, I turn on the news and you see, the markets are moving around. I tell clients like, hey, I know you live in a world of dollars, but I live in a world of percentages and probabilities. So I very much understand where you're coming from, and I live in a world of dollars too personally. But I have to look at percentages and probabilities to make decisions, and the computer can do that a lot better because it's unemotional, right? I don't feel happy or sad because of election results. The computer just looks at data and makes and executes decisions, right? But prior to your uh, technology and data, there hasn't been much to garner sentiment outside of light polling, right? So, maybe give everyone a background on what you're doing, right, and the and where your technology is and how that application is useful in my world, because that's how you and I got together many years ago. As I'm a data junkie, and you said, "Hey, Chris, take a look at this stuff. It looks really good," and I said, "Yes, it does. Tell me more, please." And then AI got really cool, and then it didn't stop calling you.
All right. No, I mean, thank you for that because you've been a great supporter. Um, the the idea, the hypothesis that I worked on when I started this company, StockSnips, and I hired a bunch of researchers at Carnegie Mellon to first see, there were several papers that had come out from universities saying that news could potentially drive prices because
Hmm.
everybody knows that revenue and earnings estimates and momentum, price momentum, these affect stock prices. It's well researched, but more and more people saw that stock prices were also being driven by investor emotions and beliefs. And the hypothesis was investors read news, either news or opinions or research, and their beliefs are formed by that. And it's not a new concept. You go back 50 years ago, if you went to Wall Street, people, gathered in coffee houses and would read the day's newspaper, Wall Street Journal, or whatever their favorite news sources, and they exchange ideas in the coffee shop and go and form opinions, and then they go and trade.
Hmm.
Except now, think of it on steroids, right? 50,
Yeah.
60,000 articles a day and from 30, 40 different sources, humanly not possible, right? So that's where I said there's got to be a better way. Can machine read and understand financial text? That was the first problem I got to solve. And obviously, because of my natural language processing and having worked on, with someone who used it for speech recognition, I kind of knew that this is feasible, right? The next thing was I found in the market there was no continuous measure of investor sentiment. Barron's does an occasional survey. People look at put call ratios and fund flows, but all of that is backward looking. There's nothing that says on a continuous basis how is the investor sentiment and emotion, how is that changing? And we've
Hmm.
seen this, especially stocks like Tesla or even Nvidia, right? They're not necessarily just driven by fundamentals.
Hmm.
So that's really what you see here, the first phase, and natural language processing, reading a large number of financial media articles, including the filings of the company, the 10K, 10Q public companies have to file with the
Yeah.
SEC, and also earnings transcripts, earnings releases, and then, of course, analysts' opinions. And there's a whole lot of news coming out 24 by 7, right?
Yeah.
Sources like CNBC or Reuters or Associated Press and Benzinga and a whole bunch of, people come at it from different ways.
You don't look at Facebook or Reddit, do you?
The social, we can do that, but we
Yeah.
found that to be unreliable.
Yeah.
And
We've chatted about that personally. I just wanted to lob that one out there.
yes,
Because
so if you
Reddit's been very popular, and you hop on Facebook and you get your neighbor's opinion about something. Yeah.
those, especially sources like Reddit, we monitor that very closely. They are still evolving. They're still not at a level of quality that competes with the more conventional sources. Like, if you look at Financial Times or look at Wall Street Journal,
Yeah.
these are well-researched opinions, and Reddit tends to be, more of a crowd approach, and we haven't found it to be reliable yet. So
Maybe
our sources are what we consider verifiable, reliable sources and we actually look at about 25 different sources at the moment, and we keep adding, deleting.
okay. And
So
maybe the socials could be a contrarian source. I always tell people, ask your neighbor what they're doing and do the opposite. It usually works out pretty. Uh,
it's a
Sorry.
short
Yeah. Yeah. Please keep on.
it's a short-term signal. That's
Yeah.
the difference. Yeah.
Okay.
Uh, the second aspect of it is once you have this sentiment signal, which we have for the 5,000 US equities, what do you do with it? How do you pick stocks? That is the second problem we went to solve, which is the how much do you allocate? Once you pick, let's say at the sector level, energy, technology, communications, or utilities, you have a sentiment at the sector level, sector trends. Then the
Hmm.
question is, how much do you allocate? How do you know what's the optimal amount of money to allocate to these different sectors based on the trends that you're seeing? And the market, just like the Tesla example you gave, that by the way uses something called deep reinforcement learning, which is what we are using here, the conditions on the road are changing almost every minute. You cannot assume that the condition on the road yesterday is the same as today. You
Yeah.
could you could have a ditch, you could have the road could be blocked, or there could be a different type of traffic that pattern that the next day. The stock market is like that. You cannot, it's not a stationary pattern. And this is where deep reinforcement learning techniques are constantly learning. It changes in the environment and adapting. And that's what a Tesla self-driving, it's not level 5 yet. It's not completely autonomous, but it's getting better and better because it's looking at the road conditions on a real-time basis and readjusting the algorithms to make the right decisions. And it's a penalty reward system. The way it learns is if it makes a wrong decision, let's say you're trying to go to a particular destination, you make the wrong turn, it's going to penalize you. You
Hmm.
make the right turn, it's going to reward you. The same thing in the stock market. The way we use it is you take a decision, which could be buy, sell, hold a particular asset. If I make this decision, is my return going to be positive or negative? If it's positive, I get rewarded. Negative, I get penalized. This is during training, right? This is how it learns.
Yeah,
Then once the model is trained to recognize these patterns, then you deploy it in the real world, and it will then give you that more optimized allocation, portfolio construction allocation decision.
sure. And you're using this for various models of different adaptations depending on what investors would like to see. Since we're at the top of the hour, I do have a couple quick questions, and I'm going to open this up here. If anyone has any Q&A, let's talk about safeguards, right? Like I always joke about Terminator and being replaced by robots, and this making bad decisions. What safeguards do you guys have in place for that? Like, how do you look at that?
It's a it's a tough problem, right? Because it goes with the goes with the territory, right? Because you're now getting into advanced models, and unless you have safeguards on how to validate these models, how to the primary thing a good AI researcher will do is ensure that the data that you're feeding is accurate.
Hmm.
If you feed inaccurate data, it doesn't matter how advanced the model is, it's going to give
Yeah,
you. I mean, think of it in the road situation. You give
yeah.
it a wrong map and you ask the car to drive, it's going to make the
Yeah.
wrong
In,
turns, right?
in my
So
world, I call it garbage in, garbage out. So our financial plans are only as good as the information that we receive. Yeah.
the the next thing is once the model has been trained and you have to do extensive testing. It's almost akin to clinical trials. You don't introduce a drug
Yeah.
without really testing it in the live conditions, right?
Yeah.
That's exactly what you have to do with AI. It doesn't matter how great your model is and how accurate the data is, how does it perform in the real world? So that if you're looking at AI, you should make sure that the model is reliable, explainable. That means somebody can interpret the decisions it's making.
Hmm.
The other thing is, just like if you're looking at investing in a mutual fund, you're going to look at the people behind it. What is their credibility? What is their experience? And so the basic questions of ethics and experience and so on that comes into play. Except here, you're not looking at how many years of experience they have on Wall Street, but you're looking at how many years of experience do they have building AI models? What is their track record? What is their training? So that's my
Yeah.
advice to folks saying, and the guardrails and the SEC is working on this is how do you inform investors about the risks?
Yeah.
And we just went through that, right? One of our strategies, we had to file with the SEC. We had to disclose all of the risks associated with it because there isn't a model that is going to perform 100% of the time. It's going to, under certain conditions, it's not going to perform.
Sure.
So I think like any technology, you'll see the evolution of guardrails and safety standards that'll come up.
Yeah.
I'm an optimist. I don't think that this technology, given how powerful it is, there's a lot of work going on in what is called explainability and safeguard, guardrails for AI models, and we are actually constantly researching that.
Awesome. Yeah, and I think that's a really good answer too on separating the hype, right, from a marketing standpoint and real actionable insights and having someone like yourself with, 40 plus years of, of real experience involved in this type of data set. My last question, Ravi, just briefly would be, what role do you see AI playing in portfolio management in 5 to 10 years from now, right? So we're starting to see it. I feel that you're ahead of the curve. You're starting to see some of the bigger players in it. We're an early adopter at looking at this as well. Where's this going? Like, where do you see this being from an optimist standpoint, and then realist? Like, where do you think we're going to be?
My view is that it's evolutionary. It's not going to completely replace human intelligence and human intuition.
Hmm.
Quantitative models have been around for a very long time. The difference here is this is a different type of quantitative model that can deal with nonlinear and non-stationary patterns, more advanced models. So it's going to augment the human asset manager or wealth manager, and it's going to bring a certain level of what you said, an objective view of what decisions you could make and what's the result of those decisions. But ultimately, it's the wealth advisor, the financial advisor, who understands their client best, right? Because your job, the advisor's job, is to make sure that the client's risk appetite, the client's goals are met, and that planning doesn't go away. That is
Yeah.
the biggest value that, and so all AI is doing then is help you, the advisor or the asset manager, an institutional asset manager, how to implement, once you come up with a plan, what are the different options, excuse me, in achieving those plans. That's so their AI is augmenting you. It's a tool for you. So it's not going to replace you. It's not going to replace an asset manager or a wealth manager. Your role will change because you're not doing a lot of the mundane stuff. You're not going and trying to learn about what these 5,000 companies are doing on a daily basis.
Yeah,
Almost impossible for you to do. So
absolutely.
so it takes you to a more advanced, more time spent with your clients, understanding their requirements, creating tailored, personalized, hyper personalized plans, and also communication.
Yeah.
Having come up with a strategy, more personalized communication so that your client stays up to date on what you're doing and how it impacts their particular portfolio. So I see, as an optimist, I see more positives. I'm not seeing, robots running around managing your money and not being
Good.
liable or
Just
responsible. I
give me a
don't.
heads up if I'm not going to have a job anymore. A little. I like to plan a little bit for
No,
that.
I think your job will be enhanced, and those who adopt this and
Yeah.
integrate it are going to be better financial advisors than others.
I would agree. I think it's a wonderful utilization of our time to allow us to spend more time with our clients and work on their personal plans as opposed to me reading Investors Business Daily or scouring through the Wall Street Journal. Implementing stuff like this can allow us to better serve our clients in ways that my head can't take. So, without that, we're right 2 minutes past our time. If anyone has any pressing questions, if you want to throw them in the chat box, happy to ask Ravi. Otherwise, we will have this played on our YouTube channel. Ravi is local. We'll talk to him often. Happy to ask him some questions offline if need be. And as you guys all know, I'm always around and available if you need me. Um, it doesn't appear that anything's coming through at this second. I want to be cognizant of everyone's time here. Robbie, thank you so very much. I appreciate your time and kind of breaking down what AI is, how you see AI, how you're utilizing AI, and where AI is working for our clients and will continue working for our clients in the future. So thank you for your time. I sincerely appreciate it. You've been a wonderful asset and friend, and thank you for helping myself and our clients.
Thank
So.
you, Chris. Thank you for hosting it. I think it's exciting times, and looking forward to working with you and other firms like yours.